What's going on, everybody? I'm Adrian and you're watching Drive to Thrive. In today's video, I'll be going over my last 4 trades from the previous month and seeing how we did on those. Hint, hint, we did pretty damn good. As well as we'll be looking at our next 4 trades for this upcoming month, and hopefully we keep that streak alive. So make sure to watch all the way through. Lots of great information coming your way. And if you're brand new to this channel, then hit that subscribe button, hit the notification bell, and if you like what you're seeing, then smash that like button. Now let's go over to my computer. Let's start off looking at our 4 trades here for last month. Now we did really good on all 4 of these, like I dropped a hint before. The only one that we gave a little bit more money on that I would like to have given up on was on Disney. So on in a Disney's case, out of the $230 that we could have made, we only made about $124 and gave up the $106. But looking back at it, it was actually a really good trade because I sold out just before earnings, and earnings were just really crappy, and I at least ended up walking away with some money. So that was a good trade. The other 3 trades, we only on Lyft only gave up $8, on Netflix 13, and on Square 10. So out of the possible $878 on these 4 trades that we could have made, I walked away with $741. So pretty good. And there was one more trade that I did, but I didn't post a video on because when I find these trades, I just do them. And I'm thinking if you guys would like me to create a Facebook group or maybe a Twitter account where I do my trade alerts, if this is something you guys would like me to do, then leave a comment below, and if I get enough people interested in this, I'll definitely set up an account, and that way you can get notifications and a little bit quicker, because I do realize by the time I do these videos, they're already a couple of days old and you just don't get the same credit spread. So let me know in the comments below if you would like me to set up some kind of a trade alert service. Now so yeah, let's go back to 22nd here. So my 5th trade there that I did this month was on ChargePoint, and ChargePoint I made $115, so nothing crazy, but hey, $115 is $115. So overall on the month I made about $856, which if I go over to my calculator, $856 divided by 5,000 is 17% on the month. So pretty good, because if you can, multiply that by 12 months, you're looking at like tripling your portfolio. So pretty good returns. And now let's go over and check out these new 4 trades. All right, so here are 4 trades for this upcoming 30 days. And we start off with Square, because Square gives me the best return on risk, which is 37%. So our maximum reward is $270. My maximum risk is $730. And this is where I get a 37% return on risk. Our next trade is going to be on Lyft, and Lyft, our maximum reward is $278, maximum risk $672, so return on risk is 34%. Our 3rd trade is on Beyond Meat. Our maximum reward is $248, maximum risk $752, which works out to 33% return on risk. And our final trade is on FedEx. Now FedEx, maximum return $240, maximum risk $760, return on risk 32%. So let's take a look at these trades over on our platform. So let's go over to our positions. And here we have another trade on that I'm not going to be breaking down because, again, I've been in this trade for about 2 weeks now. It's on Peloton. and I've made about 88% of the possible 100% to be made on this trade. So there's only $30 left. So I'm thinking come Monday, if Peloton goes up, I'll probably be selling out, because I usually don't like to hold these credit spreads all the way to 100%, because at this point, you know, you've made your 88% out of the 100% and there's only 12% left, you know. So just math wise, you know, you're risking the possibility of losing that entire 88% just to make the final 12%. So I just sell out, take a little bit of loss, and then find the next trade and, you know, make it back. So I won't be breaking down Peloton, but that looks like it's going to be another winner. So let's start off with Lyft. So Lyft is a bull put spread, and in this case we are selling the June 11th contract and $47 strike price. So let's go over to Lyft. And the reason why I'm selling the $47 strike price is because we briefly dipped below this 200-day moving average and below this support at $50, and I just thought that this is a really good spot to get in, and so far it's been working in my favor. It's been up, we're up about that 200-day moving average, about that $50 mark, so that gives me currently about 10% to play with to the downside. And again, all I need is for Lyft to stay about the $47 between now and June 11th to, you know, make money on this trade. So that is Lyft. Now let's take a look at BYND. So BYND is also a bull put spread. In this case, I am selling the June 18th contract and a strike price of $100. So let's go to BYYND. And again, this it's a technical trading. You know, whenever I do pick these prices, like the strike prices that I'm selling, there's always a reason behind it. It's not just like a random number I throw a dart at. You know, it's usually either a big support level or the 200-day moving average. And if you guys would like to learn this strategy and would like me to do a video where I explain it in detail, then once I hit 100 likes on one of my videos in the near future, that's when I'll drop that hint. So if you would like to find out that sooner rather than later, then please share this content, consider it, consider liking it, you know, and the quicker we get to those 100 likes, the quicker I'll drop that video. So BYYND, again, so like I said, it is correlated with this strong support level at $102, $103. And if I zoom out, you can tell that we've had this reaction along here. Before it was resistance, then we broke out, retested, and now we tried to you know, break down this level, but so far we bought it up, and it looks like we might be, you know, going up to that $120, but you never know with the stock market. We could open up Monday and being down 6%, especially if Elon tweets something stupid again. So that is BYYND. And our third trade is on FedEx. Now FedEx is a bear call spread. And in this case, I am selling the June 18th contract again, the $320 strike. So what do I mean by the fact that it is a bear call spread? So it's a bear call spread because in this case, I want the price to stay below a certain strike. So in this case, it's the $320 price. So as long as FedEx stays below the 320, I get to keep that credit. And 320 strike, you know, it's just about the all-time highs. It gives me a little bit of breathing room in there. So I'm thinking maybe over the next few weeks, FedEx might just go sideways. And again, as long as it stays below 320, we get to keep that credit. So that is FedEx. And our last trade is on Square. So Square is a bull put spread, and this one is June 18th contract as well, and $195 strike price. So let's go over to Square. And we are selling again this support level. So if I zoom out, you can tell that every time we get to this $193, $194 price, it gets bought up, you know, gets bought up. And this time around was same deal. We came back, tested this $194 price, and it got bought up. The only cause for concern that I do have currently is that as of right now, we are using this 200-day moving average as a resistance, where I would like us to break through it, you know, use it as support, and that would give me a little bit more of a peaceful mind, because right now we are, you know, hopefully it holds. And again, all I need it to be is like 195.50, and I still get to keep my credit. So hopefully it holds, but those are 4 trades on the month, and let's look at the overall numbers here. So in terms of numbers on these 4 trades, we are looking for maximum reward of $986. Our maximum risk is $2,914, which works out to 34% return on risk. So again, a really good return on risk. And in terms of our portfolio size, so I took that $856 that I made in the last 30 days and added it to my initial investment on $5,000. And that's how I ended up with $5,856. So if I take that 986 reward divided by the portfolio size, I am looking for about 17% return on the month again, which is just pretty good, pretty stellar, I should say, not even good. And my maximum risk this time around is only 50%. So if you saw my previous video for the trades in May there, you saw that my risk was 62%, but right now we're slowly bringing that risk down, and that's the beauty with this strategy. So I hope you guys enjoyed this video. If you did, please consider giving it a thumbs up, consider subscribing, sharing, all that good stuff, and we'll see you in another video. Ciao, ciao.